The market is slowing down a little as we enter the summer season, but not as much as it usually does. I'm Tony with Clarkson Santoro, and this is our real estate update for the week of Friday, May 31st. We know that buying or selling a home can be very stressful and confusing. That's why we do these weekly videos, so you can know how the market is impacting your options as a home seller or buyer. Let's start off by looking at how the market performed this week. So there are 38 homes active on the market right now, 2 less than last week, and the average asking price of those homes is $1,979,000, down from the average of $2,014,000 last week. 10 homes went pending this week, 3 more than last, but the average asking price of those pending homes has dropped to $1,941,000, down from $2,103,000 last week. And 11 homes closed this week, which is 1 less than last week. The average closing price jumped up, though, this week to $2,267,000, up from the $2,140,000 that we saw last week. So now that we know how the market performed this past week, we can look into the broader trends that help us determine where the market might be heading. But before we do that, if you find this information helpful, you can subscribe down below so that you don't miss out on future updates. And why not share this with a friend also? Everyone deserves to be in the know about their local market. All right, let's take a look at those indicators. Inventory continued to creep back down this week. I mentioned last week that the reduction in inventory could be caused by sellers understanding that they don't want their first weekend on the market to be during a holiday weekend. But now that we are past that holiday weekend and inventory is still continuing to come back down, it makes me think that this sudden uptick we saw at the beginning of the month was just a fluke. I expect us to stay in the 30-ish range moving forward, if not a little lower. With the inventory continuing to fall, the turnover rate has stopped its month-long trend of slowing down as well. It improved to 92% this week, up from the low of 88% last week. As a reminder, anything over 100 is a faster than normal market turnover rate. Right now we are still sitting at slightly slower than normal, but with this small of inventory, one house going pending could push us right over that 100 mark, this line right here, very quickly and very easily. Now that we know how the let's look at the lagging indicators. We can see that the market is still posting homes that went pending when the turnover rate was very high. That is demonstrated very clearly by the over-under number, still staying very high. Homes are still closing for more than $100,000 over the list price, but that number did fall slightly this week. It was down about $2,000. I think we will still see that number creep closer to about 20% or 20,000 or 1% over asking in the next coming weeks as the market starts to close on the homes that have been going pending in the past 4 weeks as things have started to cool off a little bit. And the average sales price is another indicator that is still showing homes that went pending during the extremely hot March and April. The 30-day rolling average sales price is still well over $2.2 million. This number is also starting to soften a little, and I expect it to land closer to that $2 million range for the average by the end of the month, this month or next month. Even if prices do settle in that range, that would still be about a $400,000 increase from the average sales price at the beginning of this year. Or beginning of this year. Where is the here? Sorry, beginning of the year. This is last year. So that is a significant increase over the past 6 months. The Triple Q had another moderate improvement this week as well. It's up about 0.5% from last week. Nothing too major here, but any growth in the tech sector means that our real estate market will continue to remain healthy. And interest rates that fell below 7% last week, unfortunately, that was just too good to last. After 4 weeks in a row of slightly reducing interest rates, they jumped back up above 7% this week. Just barely. We're almost to 2 years of rates staying in that 7%-ish range, and it looks like that will likely continue for the foreseeable future. The beginning of summer is usually defined by a slowing down of our market. Last week and the week before, we saw the inventory creeping up, which made it look like we are going to see that typical summer market slowdown. However, the past 2 weeks have had a reduction of inventory levels and an increase in the turnover rate. The buyer pool will still probably shrink a little, like it usually does in the summer, during the summer with vacations, but it doesn't appear to be having the same impact we usually see in the seasonal market. I think that with the inventory staying relatively low, we will continue to see a fairly robust market this summer, even if it is a little slower than what it was at the height of this past spring market. Thank you for joining me for this weekly update. I hope it helps you understand how our market is impacting your options. Don't forget to hit the subscribe button and ring the notification bell so that you can stay informed on how this market continues to shape up as we head into summer. And if you have any questions about how you can navigate the stressful and confusing process of selling or buying a home, leave a comment down below or reach out to us directly. We're here to help guide you every step of the way. Have a safe weekend. We'll see you next week with a new update.